kind of just teeing things off here with stable stories. So we've been running the series for a month or and change now, and bringing in some of the leaders in the stablecoin industry. So really excited to have you guys. I know personally, I know you guys pretty well, but also I think this is a really good chance to get a little bit deeper than some of the usual podcast questions. We'll probably touch on a little bit of general topic questions, but we'll also just go on under in terms of things that people don't necessarily see, or certain challenges and things like that. So excited to unpack that. And maybe just a quick way to start, would love for Nick and Drake, you guys to give intros on yourselves and your backgrounds and how you got to Agora.
Yeah, so briefly, I spent my whole career as a growth stage technology investor, but first got into digital assets in 2016 when I was working at a hedge fund. Was primarily interested in Bitcoin at the time. ETH was around, but there were no devs, very few dApps. I got sucked back in personally around DeFi summer. And it was very obvious to me that blockchain was going to eat financial services and payments and be the back end innovation that never happened in those sectors. And so I wanted to get in at the earliest stages, spun up the team at General Catalyst that was investing in the space, and then decided I should just go build the company that I believe should exist. There's a duopoly of fiat coin issuers, and I felt that there was no one that was serving every other enterprise, right, beyond just Tether, Circle, and Coinbase. And yeah, reached out to some friends in the space, looking for a CTO, COO, and got connected with Drake. And after romancing him for a few months, he finally said yes.
I required a lot of romancing. No, that's not true. Yeah, so on my side, I started my career straight out of college in finance on the buy side with some small firms, and sort of eventually, crypto came across my, for me, in 2016, was buying Bitcoin and also mining Ether, and had actually by that time made the jump to software. I was at ADP leading their performance and scaling team, working on a bunch of their payroll services. And rode the top in 2017, sold a bunch as I decided to quit and do something different. Got pulled back into crypto though as like a builder 2019 by one of my good friends, Dennison, who's now the CEO over at Tally. Convinced me to help him build a no-code blockchain tool. That was right before COVID, right before DeFi summer, and a lot of what we were building was based on super, super low gas prices. For people that have been around crypto for a while, they'll remember the kind of this world that people used to talk about with microtransactions and micro tipping. But yeah, I knew I wanted to do crypto full time. Went back to ADP for a little while looking, and then ended up actually at Frax in 2020. So it was there for the birth of pretty much all of the major products that are part of the Frax ecosystem now, and spent 2 years there leading smart contract development, and that's a fantastic team. And then Nick got connected with Nick, and he convinced me to leave, and the rest is history.
Awesome. Thanks for the overview. It's clear that you guys have been around the blocks. That's really cool. You guys have been building all types of things, maybe being an observer on the investor side, also just partaking yourself as individuals. And you guys touched on maybe like DeFi summer and a little bit of mining and certain areas where you got your hands wet when it comes to actually using crypto. So kind of turning that more over to stablecoins. When was your first time using stablecoins, and what was your initial thought there? Like, was there an aha moment, something else? Curious what that looked like.
For me, it was Frax, and I got paid in stablecoins, so it was sort of thrown into the deep end, and all the kind of intricacies that come with actually living your life in stablecoins, on and off ramping, the fact that your salary is public, and all that other stuff too. So that was my first foray. I don't know for Nick what it was.
Yeah, mine was DeFi as well. Like it was just like experimenting on chain with wallets and other assets, right? It was the only non-volatile asset. And so that's like how I first um got involved in using it. But like for me, like when I would say got obsessed with it was kind of post FTX, right? I convinced the managing partners at GC to let me invest in the space. I'd been talking to founders for about 12 to 18 months, and frankly was like very disillusioned with like what I saw folks spending time on. I felt like a lot of people were building companies for crypto or launching projects that sort of had like a very clear dead end being like token launch. And as someone that was really got into venture because I liked building at the front end of the tech curve with people that had 10 to 20 year time horizons, like that was a little bit disappointing. And obviously the market was imploding, and I was doing like a lot of reflection. I was like, well, why did I like fall in love with this space in the first place? And it's because at the end of the day, like why blockchains are valuable is because they can move units of value 24/7 and settle instantly, and enable composable liquidity, right? And like this just all goes back to improving the infrastructure of the traditional financial system. Um, and and so stable coins to me were going to be the stepping stone for like broader.
Did we just lose Nick there?
That led to technology innovation, but also capital market innovation, and was really a true partner to everyone else that was getting cut out of the equation, because it's really all these businesses and their users that were driving the utility and liquidity of these assets, right? And so, yeah, was there, but that's really like my journey into stable coins, and I think this is just scratching the surface. Ultimately, if you look at the Eurodollar market, like stables from a stock perspective, I think will be 10 to 15 trillion, over the next 15 to 20 years.
I think we might have lost a little bit of that response, but I think you were kind of diving in a little bit more deeply into kind of your background at GC and also just like practical use cases to make things more efficient. Maybe is there like a shortened kind of summary just for the recording? Maybe Nick's Drake, are you hearing me?
I can hear you. Yeah.
Okay, cool. I was like, maybe it's me.
Yeah, I was wondering if that was me cutting out.
Yeah, apparently also Spaces is having like lag right now. Is what this is Elon trying his best, I think, for us, which happens sometimes.
I mean, I can talk a little bit about it from my side in the meantime.
Yeah.
I think like
one quick thing is your mic might be like a little muffled.
Oh, let me maybe just turn off my mic. All right, can you guys hear me okay?
Get closer.
How about now?
It's okay. You were better in the beginning. I don't know if you changed anything. And then Nick's just out, I think. I don't know where he is.
Oh, how about now?
Yeah, there we go.
Okay. Yeah, I think like, echoing a little bit of what Nick has said or just said is, I think stablecoins are kind of this like in a real way bringing the vision of like what self-custody and what crypto, a lot of the foundational principles of crypto we're all about, right? Which is like, disintermediation, protecting, and self-custody, and like being able to escape kind of like the arbitrary whims of like the place that you live, right? And I think, for me, stablecoins are an incredible upgrade for so many people. In the same way that crypto is an upgrade, I think, for years, people have been saying to me like, well, what is the point of Bitcoin? What is the point of, any of this stuff? And I think, you live in the United States, your Bank of America account and your Venmo and your Visa card are like a great user experience, and you can't imagine why anyone would need something different. And then, you talk to people outside of the US, right, who deal with either high inflation or in more, negative cases, right? Like a malicious government who will seize your funds or, and that happens in a variety of places. And so I think like suddenly when you sort of put yourself in the shoes of those people, I think something like Bitcoin makes a lot of sense. And the stable coins are just kind of an extension of that without the volatility. For better or for worse, I think the world has decided on the dollar, at least in the for now, as a medium of account. And so it's natural that something like stablecoins are an incredible upgrade for a lot of people.
I feel like what I'm also kind of taking away from this response, but also even my own experience, I think the first time I used it was hedging when it came to on-chain trading and just getting into a stable asset is basically you kind of have to use it to really understand the value proposition because of how actually fairly seamless the traditional stack is, and where the inefficiencies exist is in the back end. And so from a user
Right.
and user perspective or a holder perspective or a payer's perspective, it actually doesn't feel like a problem that's actually that broken from, I think, the most obvious fees. But yeah, it's interesting to see, right? Like I think with emerging tech, you just really have to try it first in order for that aha moment to kind of click there.
Totally.
Which is cool to also see that similarity in your guys' history. Now, moving a little bit towards Agora as the kind of the topic of discussion, kind of in a quick overview, what would you say is Agora, and then what sets Agora apart from other stablecoins? What's its strongest value proposition for users, issuers, however you guys are looking at the go-to-market strategy?
Nick, do you want to take this one? You're on mute.
Yeah, I would say at a high level, we're a stablecoin infrastructure company that views the stablecoin as like the core to doing everything else downstream of you, whether it's on and off ramps or other infrastructure or owning the application layer, because you are the central bank. And so it gives you the ability to do things from a much more capital efficient perspective, but also make design choices that ultimately improves the user experience from, like our peer set. Like we really view our peers as like USDC, USDT. Obviously, they're much larger and have a much bigger brand name, but like we are trying to build a company that is tackling the global liquidity layer. I'd also say we can service a lot. And so one, you needed to start by being institutional grade, right? So State Street is our cash custodian and fund admin, and then VanEck is the investment manager. And so right out of the box, you have one of the largest custodian banks in the world that oversees trillions of dollars of assets, and one of the oldest and largest money managers in the world managing those assets. And so like building from a base of scale, ability, and security was very important to us. I think also being partner focused, and so working very closely with enterprises across the space to not only distribute economics back to them, but build innovative solutions. So we are also working with a number of different enterprises on white labeled stablecoins, which are seamlessly interoperable with AUSD. And so what that means is they get to tap into our global liquidity and integrations like out of the box, while like maintaining customizability and the economics. And then I'd also say, it's kind of just like working with us as a team. We've gone through a number of RFP processes with some of the biggest names in the space and come out on top. And the feedback that we get is like we hustle more, we have a very strong desire to win, but also like listen to our partners and like our active servant on their behalfs. So I think those are a few things. Drake, I don't know if there's things that you would add on more the developer first side, the design choices that we've made.
No, yeah, I mean, I think that we've designed stuff, look, I have a lot of experience, building stablecoin products from Frax, and I think we've, hurdled over a few of like the common pitfalls, and I think that will come out as, more and more developers integrate with our solutions. And I would, the only thing I would add is just like, we're sort of customer obsessed and want to build products that not only are directionally right, but sort of fit like a glove. And that's the culture.
I love that. I think in the initial time I first heard your guys' pitch, this kind of like revenue share model where you prioritize the issuers, you prioritize the businesses that you guys are targeting who will hopefully use AUSD as a stablecoin. I think that was something that you don't actually see that often in the industry. I think from the untrained eye or people who might not be listening to some of the details like this, they might say, okay, well, it's a digitized dollar, composable dollar, interoperable dollar, however you want to categorize stablecoins. But you guys are kind of taking it more from the distribution side, and then therefore, hopefully, that value starts to stand out much more clearly for the users and the holders of AUSD. So I think that's really cool. And then kind of to unpack that a little bit, not sure if you have any kind of developments on the last year, but within this model, within this revenue share model, what has been the most surprising success so far with the strategy, if any? And then are there any particular business types that are driving success with this market strategy?
Yeah, I'd say there's a few learnings. I'll start with a bad one and then a good one. A bad one is when we were starting the company, we didn't think, especially given what happened with Terra and FTX, that like exotic forms of yield coins would take off as fast as it did. And I would say like a market learning is that a lot of people just want to maximize, and this is like also from a trader perspective, they just want to maximize yield, right? Whether that's real yield or tokens. And so DeFi, I think, was less of a initial fit than we thought. I would say some of the good learnings is that, and was the original thesis, is that everyone was like, yeah, wait, why are we contributing to Coinbase and Tether and Circle making tens of billions of dollars a year when we have like 500 million USDC on our platform, right? So the opportunity to become part of that economic equation resonated, or even exceeded like what we expected. I would say the customers that we're primarily serving today are a lot of like crypto focused or crypto oriented companies, but we're really just starting to see non-speculative flows take off, right? Like if you think about what got us to where we are today, it's primarily been centralized trading, right? Places like Binance, OKX, like that was Tether's bread and butter. That's why they took off, right? USDC had Coinbase, and then we're the first big stable into DeFi. And so we spent a lot of time thinking about, okay, what are the next 100x growth vectors for stablecoins? And so we're spending a lot of time with folks that are using them for cross-border payments, using them for FX, as institutional financial products come on chain, being like that cash equivalent for those types of products. Global corporate treasury management for multinationals, right, that are operating in LATAM, Africa, Southeast Asia, that like are using either in dollars today or USDT, but want something that is more institutional grade and has like much cleaner off ramps. Like that's where I would say we're, some of the learnings that I've had over the last year and a half. But yeah, I'd defer to Drake on anything else.
No, I think that's right.
What about, I guess, as you, maybe more for Drake, like as Nick kind of overviewed some of the learnings on like DeFi not being so hot, going more towards the institutional sector, was there any like adaptation that was needed on the product strategy, on the technical side? Anything there?
I think we had kind of a lot of potential ideas. We are not like overly stubborn, I think, internally. So I don't know that there's been any like big fundamental shifts. But I think, yeah, when we started Agora, we were in this lull where, Treasury yields were like the highest in all of crypto. And I think, Nick alluded to this, but right as we launched, there were a number of, first of all, like the macro environment changed, I think, a little bit, and DeFi, came back into a little bit of a bull market. And then on top of it, there were a bunch of, exotic yield bearing assets that came out. And but I think it's been, in general, like most of our thesis have been correct, even if not to the extent that, or the size that we wanted. So I don't know that there's anything specific where we really had to pivot, from an engineering side.
I would say corporates are actually coming, like the non-speculative use cases, like we always felt would be our bread and butter market, like not like the DeFi's, is actually coming to fruition much faster. And I think a lot of that is because, frankly, like administration change in the United States, where you have the Secretary of the Treasury saying that we are going to use stable coins to maintain dollar hegemony, right? And crypto has always sort of been persona non grata, at least under the Biden administration, and that's changed. And I think it's forced some people to wake up, like to the fact that, yeah, when you move money with stables, like it can be done 100 times faster, and 100 times cheaper than the status quo, right? So I would say that's been one of the biggest positive developments.
That makes sense in terms of where you're positively trending. And of course, like when you're going to market, there's obviously so many different variables, market conditions, kind of that impact towards your target customers and how they react to things. And then maybe just zooming in a different direction, but kind of similar header. You guys talked about it a little bit, on especially on emerging markets and those use cases, but are there any specific markets that you guys are focusing on today? And then kind of the similar framing, is there any learnings? Are there any learnings from there where certain things work, certain things didn't? Where are you guys doubling down? What is that when it comes to the markets go to market? Nick, you might be on mute too.
I was going to say, Nick, I think you're on mute.
I can feel Nick wanting to say something really incredible. I think you're still on mute. Maybe it's your mic.
There we go.
Yeah.
All right. Is it finally off mute?
Yeah. I think you just speak closely to your mic.
Yeah. So where are we doubling down on go to market?
Yeah, exactly. Like geographically, are there specific markets? Any positives?
Yeah. For us, like I've always viewed stable coins being most valuable outside the United States. Like that seems like it's an obvious thing to say, but like some of our peers, in terms of the competitive set, like clearly aren't focused on outside the US, which is odd to me, because it's very easy to move dollars within the United States. And where dollars are most valuable are stable coins, right? Is cross-border payments and the end dollar demand. And so I'd say we're spending a lot of time in LATAM, APAC, Africa, and MENA, right? Where not only do you get the benefits of stable coins from like a Rails perspective, but also because you just have a lot of jurisdictions there where they don't want to be holding the local currency for a variety of reasons. And so that's where we're really spending a lot of our time.
And how long have you been pushing towards that direction so far? Has that been like a recent kind of focus, or like what is maybe curious on a little bit more detail on like what exactly you're doing? Or is there anything that you're doing differently in those markets at all? Versus, I suppose, like
Nick is on mute, but this has been a core thesis of ours from day one. Okay, Nick, if you want to take it from here.
I was just gonna say, clearly I can't mute myself anymore because the button doesn't work. But this has been a focus of ours since day one. And so I would say there's nothing that we've been doing more recently that's different. I would say maybe the one thing is that non-USD stablecoins are starting to perk up a little bit more. I still think they're always going to be a very, very tiny slice of the market, but we're a little bit more attuned to that than we were previously. But other than that, like I wouldn't say much has changed. Like our focus has always been offshore. It's why we issued offshore to begin with, because most of these non-US entities like didn't want to interact with the US, given what was going on in the prior administration. And so like being global from day one has always been our focus.
That makes sense. And I guess we'll see what happens the next few quarters, next year, to see how things shift, and maybe curious to hear your guys' updates on how things change, if any. And then as I kind of look on time, just want to be mindful there, maybe wrap up with two more questions. The first one being from both of you guys, do you have any hot takes on stablecoins? Good, bad, in the middle?
Well, one hot take is I think stablecoins are going to nuke most of the non-G10 or G20 currencies. So I think in 20 years there'll be a lot fewer currencies in the world than there are today, because in these like EM regions, like people just demand holding dollars, and the entire economy will transact in stablecoins. And in many of these, like the dollar is already like the shadow form of money, but stablecoins are just so much more accessible than cash. So that's one hot take I have. Drake.
Yeah, I would say my hot take is that in many instances, instant settlement is a bug, not a feature. Or I should say that maybe like the slow settlement in TradFi is a feature, not a bug. And I think sometimes people gloss over that when they talk about stablecoins. But there's a whole bunch of stuff we have thoughts about that. And my other hot take is probably just that like stablecoin UX today is not as good as I think it should be. I'd say it's at like 50%. There's a whole bunch, I think, of UX improvements that stablecoin issuers can make, and hopefully Agora is leading the way with some exciting stuff next year.
Nice, love to hear. Also UX, that's definitely in our camp at Eco as well. So maybe there's something there. I guess maybe one quick follow up on that before we move to the last question is, Nick, for your kind of hot take, what do you think the timeline is on stablecoins kind of nuking those assets?
I'd say 15 years, which sounds like a long time, but it's not.
Yeah, totally not. Okay, cool. That's 15 years. And then maybe Drake, for your side, just a clarifying question on instant settlement being a bug, not a feature. Do you have any like details on that?
No, I mean, I think like one of the great things about a Visa card, right, is like if the guy scams you with the bodega, you can call him and be like, hey, I got scammed, and they'll return your money. And I think like another example I'll just give is like a few years back, the Swift banking system, like there was a big hack. Someone stole $800 million. You probably didn't even hear about it because like 95% of the money was returned, and a big part of that was like slow settlement. So I think there's a lot of people in TradFi who are really scared of instant settlement. And so I think you'll see some pushback against that. But I think that the TradFi system will upgrade, not downgrade. And we'll have things like a refund protocol or other things that people can use to like arbitrate.
Got it.
Disagreements about price, but like yeah.
Yeah. Okay, so I see. So I feel like that's then more it's instant settlement, but it's also about like permanent finality, I guess, and not having that clawback.
Yeah, and I think like it's something that I talk about a little bit with people who think like crypto or stablecoins are like, just built for crime. And I think it's like there are real downsides to certain aspects of it, but again, like all of this stuff is not, it's just a immature, and like as time goes on, we'll get better UX, better security, better sort of everything, and fundamentally it's a 10x upgrade.
Yeah, totally. We'll see what happens when, I feel like a bunch of projects are trying to work that out. I know Circle, I think, was working on something like that. There's a bunch of other infrastructure players. There's a lot of people tackle that problem and figuring out how to actually make the user experience as best as possible and as seamless as possible without some of those challenges that you just highlighted. So TBD, I suppose, on that. And then as a final question to leave off, I think I'm going to frame it in this way. So for the people that tuned in, most likely are fairly familiar with stablecoins, are fairly deep in the industry, or might even work in the industry. What would you say from both of your sides? What would you say is one thing you would like them to take away from Agora? Like what should they be looking out for when it comes to the next 6 to 12 months?
I would say like the number one takeaway is just that like stablecoins should be public goods. And what I mean by that is like, the majority of the economics should be returning to the people who provide value. That's something that we believe fundamentally, it hasn't changed over the last bit. I'll let Nick touch on the exciting developments over the next few months.
I think we might have also lost Nick on this side.
He's the expert on what's coming next, but I'll give a brief preview. We've got a number of really big partnerships and deep integrations, I would say, like at the infrastructure level coming out over the next few months. A lot of partnerships, and I think the next 6 months are going to be extremely pivotal for Agora and really set us ahead of the pack.
Awesome. And then there it is. I think Nick's BlackBerry probably bricked or something. He
threw it out the window.
Yeah, exactly. No, this was great. I appreciated kind of the shortened version of just some of the things that you guys are thinking about, what challenges, and being really transparent about that. We'll have this on recording too, so if anyone couldn't listen to this fully, you can kind of go back and take a look at certain segments, and we'll put that up on the Eco YouTube page. I think in the meantime, big thanks to Drake, and then also Nick, who is probably listening somewhere, for joining. We'll have more guests on Stable Stories in the coming future, so please stay tuned. If there's any feedback, also please let us know. But for now, see you guys around.
See you guys.
Thanks, everyone.